turn my phone volume down. Hello, everyone. Thank you so much for taking time out of your busy schedules and tuning in to Candid with Councilwoman Neville. I am your host, and tonight I am joined by two phenomenal women, and we're going to talk about CPACE and any other thing that comes up, but mainly CPACE for the most part. And the ladies are Miss Abby Johnson. She's the Executive Director of Virginia PACE Authority. Thank you so much for joining us tonight, Abby.
It's great to be here.
And Miss Ebony Lofton. Some of you know her. She's a familiar face in town because she is the president of the South Cove HOA, and she is a senior commercial lender. Thank you so much for joining us tonight, Ebony.
It's a pleasure. Thanks for inviting me.
So just some brief history or just a little background on sustainability work in the town. Last summer, I had the pleasure of working with Mothers Out Front, and they educated me a lot because learning about environmental information is something I've always wanted to know, but had to take the time to really, truly dig deeper and learn how we can be better friends to the earth, you know, because it is given to our future, to our children. And we need to take care of it. And as we all know, we can go into ozone issues. There are several things going on, and we really need to be mindful of steps we take today that have an impact on future generations as far as what we do in an environmental and sustainability efforts. So we worked together and came up with a resolution to increase efforts to enhance sustainability. That was back in September of 2019. So shortly thereafter, I was approached by an environmental activist regarding CPACE. And like many of you, it's like, what in the world is a CPACE? What is this thing? What does it stand for? So that led to, you know, another time of education for Councilwoman Neville, and even with town staff who work diligently. They work so hard on putting this together. I mean, and it's a major business incentive to town. And it's a business incentive because it allows building owners to complete clean energy projects through secure funding from private lenders, which is repaid through property tax assessments. And I like to jump into that deeper, but I'm going to stop right there because I don't want to get ahead of our subject matter experts who have joined us tonight. So with that, I'm going to go ahead and pass the mic to Ms. Abby Johnson, and she's going to share with us about the relationship and the project that we have in this partnership with Virginia PACE Authority.
Thank you, Cydny. It's really great to be here. I appreciate you inviting me to this and being your partner on CPACE in the town. It's been great. I just want to say that your involvement has been I'm really grateful for it. I'm grateful for the interest and the support. So, you know, basically the way generally it works and just to talk about, CPACE stands for Commercial Property Assessed Clean Energy. And I'll share a few slides in a minute, but it's a kind of financing tool that's really shown to be very valuable across the country. And, you know, in Virginia, we're just getting going now. We have, I think, 10 jurisdictions that have passed an ordinance. Only a few have actually started a program, and the town is one of those. And the way it works is that we provide the service kind of outsourced to, work with property owners and developers who want to do projects in the town. We help qualify the projects for this kind of financing. We work with the town to market the program. And then we help with any kind of servicing of the loans that may be needed afterwards, you know, billing and collecting if requested. So it's really great in the sense that we feel like, you know, the town gets the benefit of a tool that's really at no cost to them, and we get the benefit from the town being supportive of CPACE in general and also of the resources that you have internally. So it's really a really great win-win for both parties, and it's, you know, really a public-private partnership. I would say that's the way CPACE works across the country. Cydny, would you like me to start sharing slides now, or do you have any follow-up questions?
Nope. Go ahead and start
All
sharing
right.
slides.
All right. Share away. Here we go.
Share away.
All right. I got a lot of stuff to share. Let's see if I can find the right one. All right. So everyone can see, hopefully, this picture of Dumfries. So just really quickly, I wanted to, again, reiterate who we are. We're the program administrators for the town, as well as with some other localities in Virginia. To the north and west, Fairfax County and Loudoun County. To the south, the city of Petersburg and Fredericksburg. And we have two more coming soon, one in the western part of the state and one in the southeastern part of the state. Can't mention them yet, but we're getting close. So we're excited about the fact that CPACE is becoming, more known, and there's really a lot of excitement around it from both the private and the public side. So this is our team. I can see I'm kind of loving the woman power here a little, bit, but we actually also work with guys too. So it's a great team, and we're happy to be working with the town. So I just want to kind of clarify what this is. And I think certainly CPACE financing is not something that a lot of people had heard of, and then as it became more popular in DC and Maryland, it's like, oh yeah, we've heard of that. And we're kind of getting to that point in Virginia where people like, I've heard of it, but I don't really quite understand it. So what's exciting about it is a way to finance 100% of upfront costs of a retrofit project to your commercial building, or help pay 100% of a portion of a new development. That's really pretty unheard of. 100% of energy efficiency measures, clean energy measures, renewable water conservation. And the reason why you can do that is that CPACE is an assessment on the property. So it's attached to the property. Like another special assessment, say you had a property that was in a development. I think Ebony says it's chairman of a HOA, say you put a new sewer, and then every homeowner in that case would have to pay a special assessment fee potentially for that upgraded sewer line or something. I'm just kind of using it as an example. Well, in the same way, CPACE stays with the property. This lien stays with the property, as long as the the loan or the lien is outstanding. And what that means is that it's very senior, in terms of how you get repaid. And so lenders are, like United, are happy to lend that way. They're also understand the value of CPACE, and as Ebony will, I'm sure, talk about, explain why they're willing to occasionally consent as well to a CPACE lien or financing. So it acts, as I put here, it sounds like a loan, it's funded like a loan, it's paid back like a loan, but there is a special assessment lien, which gives it this security that lenders like. It's also something that's exciting because it really funds a wide variety of measures that a lot of times you can't fund otherwise in a normal situation with your bank. And so it really broadens the options. And so I wanted to say that, the way it also works, because of this special assessment kind of relationship, that means that the town or county or city has to agree that you can use it. Because you're, as a property owner, saying, I voluntarily want to use this kind of financing. So I voluntarily are okay with having this assessment on my property that I will pay back for, say, 20, 30 years, and then the assessment will go away. And I'm okay with that because it's such a great product in terms of being able to cover 100% of the costs. But, because it's a special assessment that the city actually, or the town, enforces in case there's a problem, they have to, as Cydny talked about, agree to have an ordinance, to pass an ordinance to allow it. So that's what that's about. That's what makes it different. It makes it a little, kind of peel back the layers a little bit to understand it. So I don't want to take up too much time, but I want to point out that, of course, CPACE helps developers. It helps property owners with market rate properties, but it also really helps with a lot of types of companies that otherwise have a hard time getting capital, or that lenders who really want to lend to some of these entities cannot lend because they don't have the financial, balance sheet. They don't have maybe the credit that they would normally need. But because of this kind of super lean priority of CPACE, it makes it easier to lend. So that means that nonprofits, places of worship, community-based organizations can utilize PACE and have around the country because of this benefit. So you think about one of the first projects in DC was a YWCA, and that used CPACE. And it was a pretty complicated structure, but CPACE fit right in there and really worked well and helped finance, renewable energy and energy efficiency, and really helped, that nonprofit help the people that, were in the building. And part of it actually had residents. So it's really helpful to making it beneficial for those in need. It also helps create jobs, because as you're providing another way for contractors to be able to do projects, they're able to get more work. And of course, I think, as Cydny referred to earlier, obviously, and a part of, Dumfries' efforts to be sustainable, this contributes to that. And, it's really a kind of a private loan vehicle that is wrapped in a public structure. So it's definitely a public-private partnership, but it really provides the benefits for the environment for everyone. So the city and towns and counties benefit, property owners benefit, the citizens benefit from better air, better water, everything else. Let's see. So I just, I'm going to jump, and Ebony is going to talk later about the benefits specifically, but I just want to point out something, that it's the biggest project in our Mid-Atlantic area to date in DC, and it was to finance. This is a bigger project, so not the social equity project, but it's definitely one that people find interesting and didn't know about, and that is the Audi Field in DC. So that's a soccer stadium, and basically it's a huge project. It's, I think 300 million plus overall, and basically about 9% of it was used with CPACE, so 25 million or so was used for CPACE. And the great thing is, because they could get the 100% financing on certain measures, they could put in the solar. They could put in the stormwater system that really, really mitigates the impacts to the water in the Chesapeake Bay. They could put in the green roof. They could put in the LED lighting. And they could have done it anyway, but it really made it, something that they could really go after. They could go after some of the items that value engineered out of projects. They could get the LEED gold. They could have that paid for through PACE. So things that really enabled this to be a really sustainable project. So this is a new construction project where you can use it for a portion of the total project cost. You can't use it for 100%. It's usually around 15 to 20% of the total project, but that's still really valuable if you're trying to put in really sustainable measures. Next is two examples of kind of what I was talking about before. So the social equity, where you have, nonprofits, you have small, farms, or just, companies that are trying to do things that are really environment friendly, but they really lack the cash, potentially lack the credit or the, balance sheet to really be able to get another loan. And so PACE really acts as a driver for doing sustainability, or to actually even just help put in new equipment. I mean, PACE, can be used to, if you have a 25-year-old HVAC unit, you can, that's going to say have a, energy efficiency rating of 8. I'm going to use that as an example. Now they're like 16. So it's already more sustainable. It's already more energy efficient. And so that would qualify. So it doesn't have to be, out of the park, net zero, in terms of energy usage. But, it's something that is actually more, it's going to benefit the building because they need new equipment, and it allows for the town or the city to benefit because you're putting in equipment that is going to lower the carbon footprint. So, I mean, these slides are going to be shared afterwards. I'm trying to, in the interest of time, keep moving, but we certainly can provide these case studies, and they'll be available, and we can certainly talk through them with you, anyone who wants to hear about it. One thing I want to bring up, given the fact that we're, of course, doing this meeting, I mean, I think we were talking earlier, we could be doing this meeting in person, but we're not because of COVID. And so, we have to think about how can CPACE actually really help with what's going on right now. And so what we're talking to our lenders around the country who work in markets that are very well established. A lot of CPACE is being used to improve the air handling situation, the ventilation, improving the quality of the air. And so that, of course, is, obviously applicable to hospitals, medical facilities, nursing homes. But, I also see it as an advantage to, to eventually, to office buildings as well, because they need to be able to maintain more air changes in order to make sure that they're trying to keep the air clean and not have infectious, airborne infections. So this is just an example of how you can use CPACE in a creative way. And we've seen very creative uses of CPACE over the years. I just want to really quickly highlight before I hand it back to Cydny or to Ebony about the town specifically. So in the town, you can do any kind of commercial property that's office, industrial, hotels, retail. I don't know how much agricultural there is, but all sorts of properties you can do. Nonprofits. So there's definitely a lot of nonprofits. I've noted there's a lot of, shopping centers in Dumfries. All of these are eligible. And the kinds of things you can do, as we mentioned before, energy efficiency. So that means that, if old equipment, I'm putting in new equipment, it's going to be eligible. If I have a new building and I'm putting in new equipment and that equipment exceeds just even a tiny bit the current code in Virginia, it qualifies. Anything that's renewable. So of course you think of solar, but you could think of, fuel cells. You can think of, combined heat and power potentially. You can think about a small wind turbine. You can think about biomass. There's all sorts of renewable energy that all of that can be included. And then anything else. So, on a case-by-case basis, we'll look at other measures that could really contribute to the sustainability of the program. And then I just really quickly, in Dumfries, you can do a project for up to 30 years. So as I'm sure Ebony is going to talk about, the great thing about that, the longer the term that's fully amortized over a long period of time, the lower your annual payment. And this is really beneficial when you're trying to, make, your cash flows. I mean, it's pretty hard right now. So anything can really, you have old equipment and you're not at full capacity as a restaurant, and you can use CPACE to upgrade your facility, and your payment that you're making is the same and potentially less than the savings you get from the energy you're saving. It's a win-win for everyone. So that's something I think, is something to really keep in mind, that you're able to really pull out really long terms, which can benefit the viability of the project. Or you can do shorter terms and have really, really competitive interest rates. It just depends on what you want. And then in terms of eligibility, anything that's really permanently affixed. And, I'd say that what's typically people ask, I'd say is not eligible are appliances. But HVAC equipment is, and lighting is, and hot water heaters and water fixtures, all those kinds of things are. You can do things, anything, irrigation systems, solar, roofs, all these things are considered permanently affixed. And then in Dumfries, our minimum is 50,000 and our maximum is very high, is 25 million. So really it's going to be difficult to get there, I think, which is great. So it's great to have that really high maximum value for an individual PACE loan. And I won't go into the minutia here. It's late, in the evening. I don't want to, go into too much detail about how the savings, work in terms of the energy analysis. But we do have in our guides online the details of this information. And you basically want to show an existing building that you are saving energy over what you have today. So that, particularly for older buildings, it's pretty easy to do. For new construction, you have two ways of showing that you're saving energy, and they're detailed here. Again, I can answer any questions people have, either during our session or later. But basically, you can do 20% if you exceed code, up to 5%, and you can fund up to 25% if you exceed building code by more than 5%. But the issue that's important is that you can fund 100% of those measures in the new construction that had been identified. So I feel like I'm probably getting the weeds here, but that's something that's important to know. You're really able to fund 100% of a portion of that project, and the maximum you can do is 25%. So I'm almost done, because I feel like I really want to hear what Ebony has to say. Actually, I'm excited. I love United Bank. They're a great bank. They've done a lot of work in PACE. So I'm excited to hear her perspective. But I just want to show you generally how it works. If you're a property owner, or you're a contractor representing a property owner, or you're a capital provider helping a property owner, this is how you would do it. You would basically go to us, the program administrator. You're going to input your property. We're going to say, yeah, you're eligible. You're in the town, and you're not a residential property, basically. And then you're going to work with capital providers and a contractor to develop your scope of work. You can submit this application package to us online. And we then approve the project. And then at the same time, you, the capital provider, the property owner, capital provider, and the town will sign an agreement that basically says, yes, we're putting this special assessment lien on the property, and I'm going to pay it back to United Bank over 20 years. Here's the amortization schedule with the loan amount per year. And this is how it's going to work and how the funds are going to be remitted to the capital provider. So, we can go into more detail another time, but that's generally the point of that agreement. Once we record the lien, then I'm just using United because you're right here, and excited that you can PACE lenders here with us are going to remit the funds either all at once, depending on the size of the project, or in several installments, just like you would do with a regular construction project. You complete the project, and after you complete the project, then depending on when tax payments in the town are due, that's kind of when you would typically pay your first payment. So you pay it back at the same time you pay your property taxes. And then we continue to make those, 2 times a year payment for the life of the PACE loan. So that's, generally how it works. And it's something that, again, we can go into detail another time. And I believe that is all for me. I think all I have is our slide about how to get a hold of us. And I think that'll be posted. So I'm gonna let you wonderful ladies, pick it up.
Thank you so much, Abby. And I am sure we're going to have some questions for you as we move along through our candid conversation. And that was a wealth of information. So this is a really good program to have in town. And let me ask you, what number? I don't think you all have 10 CPACE programs in the Commonwealth of Virginia yet, do you?
We are running 5 out of the 6, and we'll be running, and then the other 3 or 4 jurisdictions have just passed an ordinance. They haven't moved forward. So, okay. Yeah, so we're getting there. I say there's going to be a big one in Hampton Roads coming online really soon, and then a fairly decent sized one in the west. But I had to point out, you're the first town, and you're one of the first jurisdictions in the Commonwealth. So I mean, really, kudos to you all for doing that so early.
Yeah, I had to put a reaction up for that.
I don't see it, but hopefully it's a
I have like just the noise thing, or it looks like it with all the confetti coming out. But you know what? Let me go ahead and put a hand clap on there too, because that's just amazing. Dumfries, we always lead the way. So thank you for that. I know we'll have some questions for you, but right now we are going to pass the mic to Miss Ebony Lofton.
So the common statement in 2020 is you're on mute. So thank you guys very much. Hope you can see my screen here. Abby really touched on a lot of great information, and pretty much the same that I wanted to share with everybody. Again, it is a great program from a financing perspective. There's so many benefits to business owners and even tenants from a cash flow and operating cost standpoint. One of the slides I prepared here is just some questions. Why would a business owner, or why would a property owner choose CPACE? As Abby mentioned, it's longer term financing and typically lower financing costs. One thing I'll talk about briefly is conventional commercial real estate loans, and even mandated by law, require appraisals. And if after a certain short term, let's say you get a 10-year loan, but after 5 years you want to change the terms in some way, you're going to have to get another appraisal before that loan can be reviewed. So it's a great option to not have to incur that cost, or if there are concerns about loan to value, because again, it's attached to your property assessments. Of course, the obvious is once you're making these assessments, the improvements, then your property values are going to obviously increase. So there's always a great reason to do it there. Again, it's transferable. So it's not as if you sold that property, you have to continue making those payments. The new property owner, obviously fully disclosed about the special assessment, but now they take it on. So that's a great incentive as well. Again, as Abby mentioned, it's available for both new construction and existing buildings. And another obvious increased energy efficiency results in reduced costs. So here are some of the comparatives. As I mentioned, no appraisal required not typically for a C-PACE loan. It certainly can be done, or it may be part of other transactions. It is, again, secured by a special assessment versus a deed of trust or mortgage. Another cost associated with a conventional loan are recordation costs. So you've got to get a title company involved and things like that to record that debt. And so you don't have that typically associated with the deal. Again, fully amortizing. So, usually maximum terms on a commercial real estate deal might be 10 years, and you'll have at the end of those 10 years a balloon payment. And you can renew that loan, but the interest costs associated with spreading it out over 30 years versus 10 years is very different. Monthly debt service, which we call, and we refer to in banking, is what you have to, your loan payment. And so that takes away from money you might be able to use for payroll or money you might be able to use for normal operating costs. But when you're just paying the special assessment, particularly after you've made these improvements and you've generated more income from savings, you're only making those, 6 months, every 6 months, or annually. Another thing that I think is great to know is, again, in a conventional loan, it usually most banks will require recourse, which means if I am the business owner and I have a commercial real estate property and my business is XYZ company, the bank is usually going to ask that I guarantee the debt as well. So worst case scenario, the business goes under and has some problems, they're going to also come after me. So in this instance, it's not a recourse deal. So it's attached to the property. And the attractiveness to lenders is that there's a priority lien. So even if you didn't have a C-PACE loan attached, if there were some delinquencies in your tax assessments, the municipality or the government agency can, pursue foreclosure, and any mortgages that are attached are going to take a back seat to the tax assessment. So it's an attractive deal, if you will, for lenders, because they know it's almost guaranteed. We don't like to use that term because that's not exactly what it is, but the risk is much lower because of how it's designed. And again, as Abby described, you have the town of Dumfries, you've got the property owner, and you've got your bank that are all working together. So those are great reasons. So I also provided a case study of a deal that was actually done for a self-storage facility, and they financed some clean energy, water conservation, and energy efficiency projects. And they actually installed a rooftop solar panel, basically. And not only did it help the building, but it also helped the tenants who were in that building, because they got to benefit from the energy efficiency. The loan was $425,000, and it had a fixed rate. Now, that is another thing I will share in again, conventional loans, depending on what we call the risk factor to the business. As Abby mentioned, if a business doesn't have strong cash flow, but they've got great collateral, or they're a government contractor, there's some comfortability for the bank, but based on how they performed over the last usually 2 to 3 years, maybe they have a higher rate, or maybe their rate is tied to an index that changes. And so when you have a fixed rate loan like a C-PACE deal, what you can plan with some certainty. And then the banks typically don't have very high fees, again, associated with conventional loans. One thing I will say is, with any other loan with a bank, there is some requirement for financial statement reporting and things like that, but that is not uncommon, just to ensure business continuity, as we call it. So that's pretty much my take on it. I don't know if anybody else has any questions, but thanks so much for allowing me to share.
Thank you, Ebony. That was some really, really good information. And I'm sure anyone who's tuning in, you all are making it easier for them to understand and make it real and relevant for them to use CPACE. So I do have two questions that I'll just pose, and both of you can chime in however you want to with these. But one, a lot of people who run businesses in the town of Dumfries may not be the owner of the property. So do you have any tips, either of you, for them to go about having that conversation and dialogue with the owner of the property, you know, to take part in a CPACE program, to take advantage of these benefits?
Who should go first?
I'll let you go, Abby.
So yeah, I mean, the split incentive, as it's called, is exactly what Cydny's referring to, and it's something that you can solve with CPACE in a lot of situations, and it's really about the lease. So you know, from the perspective of the tenant, you can say, okay, our tenant lease says that we're responsible for our pro rata share of, you know, the property taxes and the insurance and other things, common area maintenance, things like that. And, you know, usually a lot of times the property owner wants to use CPACE and they're like, oh, I got to convince the tenant. But the tenant, you know, will say, okay, because whatever you're putting into the building is going to save more energy than their pro rata, you know, share of the PACE payment. So, and alternatively, if the tenant wants all these improvements, they can say, hey, you know, these improvements are going to save me, you know, you're going to make sure that I'm going to pay my portion of this, you know, or the PACE payment for the new LED lighting and new HVAC. As long as you also, either I have control over my electricity bill and can see the reduced payments, or you landlord are going to make sure that I pay less as a result, you know, of the fact that I'm making these upgrades through PACE. So if you know, if my loan payment is, I don't know, 50,000 a year, I'm using probably a pretty big tenant, and I'm saving 60,000 in my annual utility bills, then I'm all about using PACE, because basically, you know, we haven't had to negotiate TIs and all that kind of things. So it definitely is something that I could even share a case study at some point. Anyone's interested about showing how the tenant and the landlord both benefit. The tenant benefits because they pay lower, you know, their net cost is lower because of these energy bills being lower. And then landlord benefits because they basically been able to upgrade the property and they didn't have to pay out of pocket.
All right, thank you. Ebony, did you want to add to that?
No, I think Abby said it perfectly. There, particularly about when she's mentioning about pro rata share, and you know, definitely it depends on what the agreements are, but the benefits to the owner, I think it would be, you know, if a tenant has a great relationship, I think that is definitely helpful. But you know, if they're hesitant about presenting it, I'm sure they're with their lender partners could be a great ally in convincing, if it's even necessary, a landlord. But there's so many great benefits to both parties that it would be hard pressed to find any real difficulty.
All right, thank you. So I have one other question. People are kind of quiet tonight, so you know, you shared your emails. Expect to get some emails when they have questions, or I will forward emails they send directly to me. So the last one is, can you finance projects that have already been completed?
So I'll just chime in, because in a lot of places we can do that in the country, and we're finding that right now, particularly with COVID, a lot of property owners who have just completed projects, or maybe in the last year or two, are like, oh my gosh, I'm really cash flow constrained. It'd be great to be able to use CPACE actually as a way to get additional cash flow by pulling out what was energy efficient in their project that's been completed. In Virginia, we can't do that right now, but I'm, you know, really pretty sure we're going to get it next year. We're working with the state government to put it as in our General Assembly package with the governor's office. So there really shouldn't, I can't imagine there's any opposition, frankly, because I mean, how can you not want to benefit property owners who are having a hard time making payments right now. So
Right.
we can't do it yet. We can soon. It's my prediction.
Okay.
Yeah, and in my experience, again, for established borrowers that we have, over time, depending on the environment, obviously, with COVID, we've processed. I think we definitely hit over $1 billion in PPP lending, and I mean, we were up 3 and 4 o'clock in the morning doing those things. So
Wow.
we know firsthand how this particular pandemic has affected everybody. But overall, for any businesses, sustainability, to be able to kind of retroactively get credit for that. And I'm sorry, Abby, if that's the wrong term, but to
It is. That's true. It's true.
to be able to participate in the program and say, hey, you did something great and created clean energy. And so here's some extra cash that you can use. Again, whether a business is looking to borrow or whether they just are trying to manage growth, cash flow is so important at times. It can make the difference of not just payroll, but of buying more supplies or being able to take care on service calls or make maintenance repairs. So a lot of times it's a huge difference. And again, that thing in banking that we measure debt service is basically saying how much cash flow do you have available after you make a payment or after you pay your bills. And something like that, I think would be, that would be extremely helpful. So that's good to know. I hope it passes.
I know, and I want you to be doing it. And,
yes.
in Virginia, I'm excited that United hopefully will soon be in our, be in the state, because I know you all are. Do you mind? I just want to call out United Bank and Ebony and her team. They've been phenomenal for CPACE in the Mid-Atlantic. Unbelievable. They're probably the first bank that I know of in the country that lent on CPACE. So you all are thought leaders in this.
Thank you so much.
Honestly.
And Blair O'Connell says hello.
On my back.
And Joe Levin.
Yes.
I'll tell them you said that.
Tell them they should be calling you about getting in the program. There you go.
Good.
Look, I'm just glad that we have Ebony and all of her knowledge right here in the town of Dumfries, because, a lot of people just don't know about CPACE and how it can help them. And we have some projects on the way where we're going to need more business incentives such as this, especially with widening coming.
Right.
There are some big companies coming to town right now that could actually benefit, like Abby had mentioned earlier, the shopping centers and everything. So with that vein, of incentives for businesses that are here and businesses that are going to come, especially once Route 1 widening, once it's completed. In a perfect world, without COVID, in a perfect world, if you could snap your fingers and implement a complimentary program as a business incentive in the town of Dumfries, what would it be and why?
I'm gonna let Ebony go first on this one.
Okay. So a lot of you may, again, I'm in banking, but one of the things I'm really passionate about is financial literacy. As a committee member of our Community Reinvestment Action Committee, you have seniors who are taken advantage of sometimes, and you want to let them know nobody's going to ever ask for your social or your credit card number from the IRS or things like that, or little ones who are just learning about money and getting their allowance. They are learning about money. So it's so important. But we have a lot of businesses who generate millions and millions of dollars of revenue, but at the end of the day, they're still in the red. Or, a small business owner is taking every dime out because he wants to drive a Tesla, and nothing against that, because if you've earned it and you've worked for 20 years, maybe there's reasons behind it. But I think if I've snapped my fingers, and guess what's going to happen, Councilwoman? There's going to be a financial literacy for businesses. And I would imagine something in sort of a series, right? So maybe you want to learn about cash flow, or maybe you want to learn about what is net operating income and why do I care about it? or maybe you want to learn about environmental issues that could affect you. Like if you are in a shopping center and one of the tenants 2 doors down from you is doing some projects, how will that help you? So that would be something I think would be great to see. And maybe even the series B, it doesn't have to be in order, but at the end of it, you get a Town of Dumfries certified business certificate for financial literacy or something. But not that customers would necessarily care, but it would be something that I think business owners would be proud of. And sometimes it's cost prohibitive to hire an accountant or to hire professionals to do things for you. And so a lot of businesses do it themselves. So that would be my wish.
Awesome. I'm excited about your wish. Again, glad to have Ebony in town. These are great things that can come to us. Abby, what you got over there?
Oh man, she's hard to top. I'm going to probably cheat and do two things really, but I want to follow up on what Ebony said about financial literacy and point out that Virginia Housing, which is they do all the tax credits in the state and do a lot of affordable housing financing. They actually do have financial literacy programs for low to mid income tenants and landlords and whatnot. So if anyone's interested, Cydny, and they ask about it, I'm happy to share that. I'm on their board. So we're always been briefed about how that works. And there's a lot of interest to that. So anyway, it needs to spread beyond individuals though and go to businesses. Amen to that. And I was actually on the phone. I was on a call earlier today where we're talking actually to a potential group within William and Mary to help us with some of our marketing. And they're like, oh yeah, I think we need to get incorporated. I'm like, yeah, kind of do. So they didn't know. I mean, it's just, they don't know. If you're young and you're just getting out there, you don't know what you have to do. So I think that's an amazing complimentary thing. Two things I would say. One is similar in a way in that I think contractors, I would like to encourage young people in community colleges, maybe even high school, as they're going into the trades to really understand how to sell energy efficiency and renewable energy from a very young age and to get more diversity, because really we have diversity in two ways. One, actually in getting more minority owned businesses that are able to enter this market. We're still in a very, kind of non-diverse industry in general. And I would like to be more understanding from a very young age or get some trade knowledge of financing energy efficiency and getting in with solar companies or getting in with finance companies that we work with or getting in with companies like us at a young age, because we need to build this knowledge with the Gen Z, because they're the ones who are going to, unfortunately, we've left it to them to figure it out with the environment. So I really would like to have that be something valuable, be able to have the financing to create programs like that in community colleges and high schools. The second thing I would say is I'd love to have a revolving loan fund or money available for really small projects. We pointed out 50,000, and the reason is even that's really low. I don't know of any lender who really wants to go that low, because it's just, there's a certain amount of work involved in getting an energy efficiency project across the finish line. And we just really need to be able to help these really micro companies, small businesses, to be able to do energy efficiency. So that's what I would love to have, more ability to get funds that would help support, financial institutions to support these tiny companies. So that was two. I cheated.
Those were two good ones, though.
I like liberty.
Yeah,
I'm going to take a point of privilege to cheat as well, because I was asking the questions to you all, but listening to your answers are so innovative. I got one I want to share.
Yay!
Yeah.
A co-working space in Richmond that I love. They have I think they just opened up one in Midlothian, literally 2 days ago. And they have locations in Virginia Beach and I think Norfolk.
Is this Gather?
We need yes, ma'am.
I love them. Sorry.
I love Gather. And so I think we need a co-working space.
I like that.
To that, where we can incubate. I could take both of your ideas and put them in this space, because they have workshops and other professional development that takes place, as part of your membership. and, slap a solar panel on there, on the building. And I think something like that would be wonderful to serve as an incubator, because we have so many micro businesses that could have office space or co-working space as they need it, and house their businesses there. I just think that would be absolutely just spectacular.
It's a very huge trend now, and it's so, again, it's cost beneficial to the businesses that don't need to. I mean, obviously now none of us really are, but if you don't need to be in there 5 or 6 days a week and you can go in once a week, that's an excellent idea. I like that.
Yeah.
And I think are there trends now that businesses are not wanting, maybe people, what is this, something I read that a lot of people want to, like maybe 20% want to go in the office full time again, but there's like 50% who want to do partially at home. So they don't, then the co-working space would be ideal.
Right.
Because I often think about, like, what is this going to look like once we're past COVID? Like, why would a business, after you save all this money from not having the brick and mortar, everyone does not need brick and mortar anymore. So the way we think about things, even not to go total tangent right now, which I have it doing sometimes, but even housing, an apartment complex, a new norm might be, hey, every apartment needs to have this space, this workspace, that's its own little space, even if it's just a nook in the wall between the living room and the dining room. That will be a standard in new construction coming up. So I don't see everyone going back into a building, and I see some companies, once their lease is over, may let the building go. So co-working spaces may be the next big thing. I know we have some spaces, one in Woodbridge, I know there's some in Alexandria, but I haven't seen anything like a gather, so like my membership, I belong to the one downtown, but I can go to any of their 7 or 8 locations.
Wow.
And have conference room, podcast room, access to so many things.
Is cool.
Podcast is cool. I think we financed a project in Leesburg where a customer, borrower, bought a building, and they have had success in sharing space. The other thing I thought about was, like, I have a cousin who's a government worker, and she works 10-hour days so that she can have every Friday off. So, if offices start to go into that trend, then maybe you have, less need for people to go in. It's probably not ever going to happen, and not being pessimistic, but just realistic. One of the things I suggested when I first got on the HOA board is we had a vacant unit that was vacant for quite some time. And I was like, hey, what if we purchased it or created a lease agreement, and we could have, a printing center, maybe put some exercise equipment, maybe some of the officers on duty that night could have somewhere to sit and, be close to our community. The management company could stop by. So I love the idea of sharing space and being close knit, within a community. So fingers crossed. We'll snap a few more times and see what happens.
So how about we find a grant to help fund a little bit, and then United could maybe provide some of the money.
Absolutely.
Yes. Okay.
As long as no one does it for me, conflict of interest. I want to keep it honest, but.
So, ladies, any final thoughts?
You go first, Ebony.
At least give CPACE a try for any of those business owners and tenants who are interested but need to nudge their landlords a bit, and anybody who's remotely interested, please, find out more. And as Abby said, the town of Dumfries to have been one of the first, to be the first to have done this is absolutely phenomenal. And it's hard to put into words, that this opportunity for a lot of the stakeholders in the community. So thank you, Councilwoman, for putting this together. It's been
thank you
a huge blast.
Well, I don't have anything more. I think that was amazing what you said, Ebony, and I totally agree. I think I appreciate the opportunity. Hopefully happy to answer anyone's questions. Happy to do this again. get more into detail. So grateful that United and Ebony are involved. Really, it's very exciting. We love our banking relationships, our banking partners. We can't do without you. Can't do without you as well. The town, you and Cydny, and so the town. There you go. All we need is a property owner, right?
That's all we need.
That's all we need now. So come on down.
Come.
Well, thank you, ladies, so much for sharing so much knowledge, just honestly sharing jewels with people who tune in so they can understand why this is a big deal and why it matters and why it is part of the future growth as a business incentive for the town. So thank you so much for your time. Thank you to everyone who tuned in. This video will stay on the Councilwoman page. It will also be posted to YouTube, and I will be emailing that link to both of you momentarily, as well as posting the YouTube link in our event as well that I set up on Facebook. So thank you so much. Hang back for a minute. I am going to end the live stream. Wait bye to anybody tuning in.